Miguel here with the Winston Minute, our report at the market's close. And today, an overall positive day here in U.S. equities. We saw the Dow Jones up about 55 basis points, the S&P 65, and the NASDAQ about 7 and change. 71 basis points. So straight up in succession there. We saw a rally in U.S. tech stocks. Within the S&P, the tech stocks sort of cut their rallies short by the close, so it wiped out most of it. We saw that within Apple as well. It got a little bit of a let's call it shy rally yesterday with some aftermarket up and down, pre-market up and down within the 1% range, but today it closed, I think, close to 2% down overall in the past couple of days. Because although the launch of its credit card and announcement of its streaming services and news services, which on our end we're not terribly impressed with, we haven't seen any of the content services, and then the credit card doesn't seem terribly substantive to us. It looks like a regular MasterCard partnered with Goldman Sachs with a no fee, perhaps it's introductory, and then probably an attractive interest rate up front, but if you don't behave, I think it's going to behave very similarly to any regular credit card. It's an attractive business, and the positive we see is that Apple has direct access to market this product to every single Apple product user, mostly iPhone, but I'm sure they'll find a way to get it in front of you if you own a computer or a tablet. And that's very attractive, and it's also generally the folks who can afford Apple products tend to be on a higher socioeconomic scale, so probably more attractive credit prospects than other businesses that have tried to market and launch a new credit card. So positive and negative. The negative came from the courts today discussing potentially banning Apple product imports after they violated a Qualcomm patent. So I don't know terribly the details of the patent violation and what it constitutes, but they're talking about an iPhone ban, and so that sort of sliced off any rally that was seen in today's markets. We also saw energy shares climbed, some indication that Russia is getting the reins of its oil production. We saw that in OPEC as well. I was just talking earlier today, we're working on a research project for a client in the oil services sector, and we were really, Fabian and I reached a conclusion or really agreed on one point, that was that there will be a direct correlation between OPEC and its partners' ability to control its production, or at least follow through on what their action and goals are, and the recovery of the oil and oil services sector. That said, there's a lot of large banks and research firms that are very bullish on oil and oil services. A lot of analysts are giving buy indications to companies such as Halliburton that have been battered this year. And so we'll see that, and we saw that today briefly in markets. Today, U.S. bond yields rose after falling for 2 days, but the yield curve remains negative and flat/inverted. A lot of gloom and doom surrounding that. It tends to be a good indicator for recessions. But Goldman Sachs came out today saying that, listen, the outlook for global economic growth is still very strong. The economic data and employment data and consumer data here in the States is still very strong. So it actually may create conditions where this flat yield curve could lead to kind of an extension of equity markets. If you were listening this morning to Fabian, he was saying we might climb this wall of worries all the way to the top. As in general, I tend to be a little more pessimistic, so hopefully we climb that wall of worries and don't fall over to the other side. But for now, we're in a watch and see. We saw a couple more comments. We saw also gold fall and the Japanese yen lead losses in haven currencies. The greenback, also the US dollar, also erased its monthly drop, so a rally there. And that's all I have. We'll catch up tomorrow morning, and once again at the market's close. Take care.